With Sean Darby, Chief Global Equity Strategist at Jefferies. He joins us in the First Up studio this morning. So, time to smile again, Sean.
Well, certainly some of the numbers coming out of the US and in Japan have actually been a lot better than expected.
Yeah.
In particular, we've even had good retail sales numbers in Japan as well. I suspect that actually a lot of this sort of was companies being too hesitant about inventories and being too concerned that the slump in demand would continue all through 2014. And that's particularly for the Japanese companies now, the weaker yen is bringing back a lot of competitiveness, and they should, vis-a-vis their US competitors, do quite well.
I mean, the story has been about U.S. recovery, U.S. strength, really pulling the global economy along, and then the FOMC is wrapping up its 2 days. So what do you expect?
Well, we expect, of course, them to finish the tapering. I think actually things are being quite benevolent for Ms. Yellen and her board. That she's got those low commodity prices. She's got decent economic growth. The lead indicators are picked up. And even the futures markets are saying that the only rate hike out there is going to be right until possibly the end of next year, early 2016. So they really don't need to do anything. They've got everything settled as they would possibly could have at the moment.
And one of the underlying stories is fracking, shale gas in the United States. They don't have to depend on much of the world anymore. They're producing their own, and it's really driving down oil prices.
Well, I think there's really two wars out there. You've got this commodity war going on at the moment, where Saudi's sort of fighting for market share, and that's brought Brent crude prices down to 80, possibly even lower, I think. And equally, we've had a currency war. We've had a very, very cheap dollar, and the US has settled in between both of those low commodity prices, particularly for gas, and also a cheap dollar. So I think, again, the backdrop for the US corporate profits is excellent, and we're seeing that now with the results coming out.
And really reducing the bill for raw materials and things like that in terms of production for companies.
And also lowering long-term borrowing costs, so your 30-year mortgage rates have gone right back as well. So again, it's a sort of very benign environment, a little bit like the late 1990s, where commodity prices were low, interest rate expectations kept falling away because growth in other parts of the world at that time was actually quite weak.
Well, if only we stayed there and continued to grow. But, of course, we all know what happened since then. What do you play in the markets right now?
Well, I think the two big opportunities are one with the global consumer.
Yeah.
I mean, you've had a rise in real terms for the US consumer about 0.5%.
Yeah.
And that feeds through into emerging markets in China, India. So about 2/3 of the world's consumers are actually going to be better off over the next 6 months. That's great for restaurant chains in the US, Yum brands and those type of companies in Asia.
Yeah.
That's a very easy way to pick up that marginal discretionary spending. And the other side of the coin really is to play the REITs. Those long-term rates falling, they're great for US REITs and also the Hong Kong-listed REITs here as well.
You know, we had the CEO of Yoma come in. This is a real estate developer in Myanmar, one of the very early pioneers in that market. They just got a deal with Yum to put KFCs into Myanmar. But talk about these frontier market opportunities as well. Does that factor into any of your professional strategies?
We do cover one or two of them. The one that we like the most is actually Sri Lanka.
Really?
In fact, again, there you have a sweet spot of good demographics. A bit like the Philippines, very strong remittances.
Yep.
And it's had also a tourism boom, quite good exports. And again, a nice environment of falling inflation. And that's the sort of stories that are still around in the frontier markets. Vietnam falls into that. But our best one is being Sri Lanka. We think, again, the markets there, and particularly companies like Nestle, Sri Lanka, and that will actually do quite well.
Vietnam is an incredible story there because we've seen what foreign investment has been able to do for that country. But at the same time, they're trying to, reform themselves, turn many of these state-owned companies into private enterprises. But their IPO has not been, that process has not been as successful as they hoped. Why not?
Again, I think a lot of it has been resistance to perhaps some of the reforms. Very easy sometimes to say about reform processes and, putting more foreign ownership in, breaking up some of these SOEs that had quite large dominant market share. The good news is, though, that the backdrop for countries like Vietnam is actually quite good. They've got the tailwind, as I say, with things like falling energy prices to actually encourage them. They've also been through an IMF program which has allowed them to bolster their balance sheet.
Well, speaking of IMF, we're running out of time very quickly before I let you go. IMF basically said Abenomics, Not working. Probably not going to work. Do you agree?
I think it's still too early to say. You're only 18, 24 months into it. So far, he has seen a pickup in wage growth. Corporates have begun to spend. And again, they've got inflation expectations into their economy, which none of those three things they had nearly 2 years ago.
That's not going to be helped out by those lower oil prices, though.
Well, again, ironically, though, it gives the room for the BOJ to do a lot more easy, and potentially, we think, possibly into early next year. So I would disagree with the IMF. Looking 2 years ago, I think things have actually been on the ground. Things have actually changed much better.
Sean Darby, in the camp of Abenomics, it's still working, but of course, we shall see.
Thank you very much.
Sean Darby, it's always good to see you. Thanks for joining us in our Hong Kong studio today.